Hey everyone, so we're going to do an update on the most important cryptocurrency and the safest cryptocurrency and the king of them all during this bear market, USDT and USDC. Only kidding, let's dive into Bitcoin and take a look at the most likely direction that the market is going to take as we've printed a brand new monthly candle. And we're going to take a look at some of those targets both to the upside and to the downside. So if that sounds good to you, drop me a like and also a comment down below with what you're currently doing and if you want me to cover anything specific or any specific altcoins in this space. So subscribe to the channel if you haven't done already, and without further ado, let's crack on. So you can see that since we made our last video, we've been pretty range bound in the same price range between about $17,500 up to about $22,000. Currently gaining support on this order block that we've taken key note of to the left, which is also the all-time high. We've also speculated that in historical bear markets, whenever we've had this crossover of the 20-week moving average go down below the 100-week moving average and tag the 200-week move average down below, you can see that that's typically marked out bear market lows, and I don't think that anything is going to change my mind until we basically start to move any lower than $17,500, which is why my current stance is still that we're likely to either go sideways or potentially even get some sort of rally in the next month or two when people aren't expecting it. Furthermore, you can see that on the monthly candle, we've actually dropped pretty much about 40% and is on par with the worst month that Bitcoin has ever had on a trading chart. And you can see that any time that we've had this 40% drawdown in a month, we don't typically tend to get a lot more downside action, as you can see in the last couple of bear markets that I'm just marking out over here. Okay, and that the most likely course of action at this moment is probably still to consolidate sideways, or maybe to potentially to grind lower, but probably not that likely that we just move straight down in a straight line and go much lower than where we're at. Sure, it can happen. We've got slightly different macroeconomic conditions to contend with at this time round. However, I do try to stay objective with the charts, and I can see what has also been doing the rounds recently is this trend line, this 7-year trend line that we're currently touching at the minute, to potentially get some support from. So we've got quite a few reasons that we might not be quite ready for a another leg lower, considering that we've already dropped like near on 50% from the levels of about 40k or so. So yeah, that's basically what I'm looking out for at the minute, is more sideways action before we move in the next market direction. Now, on the short-term time frame, we spoke exactly that if we were to break this 19.5, 19.4 level, we would likely retest this middle price point area of about $20,000 to $22,000, and we were going to see exactly what we were likely to get at that level, which was potentially that we were going to either going to hold it, or we were going to come back and down and retest some of these lower levels. Now, that we would come down and retest some of these levels at about 18k at some point would have been my contention for sure, but at the minute we're just seeing if we're going to be either continuing with that fractal that we looked at in 2018, and I'll bring that up in a moment, or if we continue to gain a little bit of support here and maybe form some kind of W or double bottom here, because once we broke this 20,000 level, okay, we're dropping straight down into the next order block, which is this bottom order block at somewhere between 19.4 and 17.9 $1,000, and you can see that's exactly what we've got. And overnight, this is so far just a continuation of the trend, but we did get a big pump and a big spike up in price overnight. And currently, for this price action, for me to show that it has some momentum to the upside, and it's not just a fake massive wick to the upside on the daily time frame, is that this area of price action, once we broke it, is we're currently retesting this level, and I think if we retest this 18.6 and lose this level, then we are likely to potentially double retest this bottom of about 17.5k to see if we can hold it. But if we can hold this and start to show a little bit of momentum and moving higher up into, again, challenging $20,000, I think there's a reasonable chance that we can still move higher from here. Now, when we looked in the last video at that 2018 fractal in December compared to where we are currently, you can see that we're asking ourselves the question, are we in this potential move over here where we broke down from a descending triangle, okay, tested some lower levels back in 2018, and then we were looking for you know, that potential retest into the area that we broke down from, which is exactly what we've got so far. And like I said, I said that if we break 19.5, likely that we do retest this area, and then we want to see if we hold or we don't. And you know, potentially if we start moving any lower in the same way that we did on the left hand side here, and we start to grind any lower, okay, maybe we can look for some similarities over here. And if we do break below $17,500, the next level below that I can see of any significance is going to be about $13,500, $14,000. And if that doesn't happen, maybe we can just take out a few stops or basically just take out a little bit of liquidity and scare everyone as we did over here in 2018. Quite a possibility, and maybe we grind down and form a similar kind of fractal to what we got there, and maybe that's where we bottom. But if we can hold this area, like I said, and then we can start to move up to about $22,500 and clear that area, in my opinion, I think that does definitely open the door for at least a $25,500 Bitcoin. And you can see that the potential move to the upside to $25,500 is exactly at that 1.618 level, you know, providing that this injection of 10 to 12% upside that we got overnight is not a fake out. That's a level that I'm going to be looking out for and could potentially complete some kind of A, B, C if we were to move up there, and then we would want to see and reassess if we're going to move any higher, fill up any CME gaps, definitely a potential. But you know, from there we could potentially even move any lower and basically continue our leg to the downside at about $14,500, which we are also open to the possibility later on in the year. Now, if we continue in the same fashion to the downside as we have been in this downtrend and in this bear market, you can see that if we were to form some kind of sideways consolidation from current price levels, and we do exactly the same thing that we did over here, okay, in May before we broke down, that would take us up to about midpoint July. And this is definitely another scenario that I'm looking at where we might basically be playing the range and stay range bound between about $22,000 and $18,000 or so, okay, and stay within that range. And the one thing that I want you to take away from this as well is if we stay within a range like this, the direction of travel, okay, if we break it to the upside or to the downside, is going to give us that confirmation of the likely direction of where we're headed next. And the longer the consolidation phase, if something like that like this does happen, okay, is that when we do eventually break up or down from that level, it means that not only do you have more confirmation, okay, and you have a higher probability that that trade is going to work out, it also means that the move to the upside or to the downside is likely to be proportional, okay, to the level of consolidation that we get. So if we don't consolidate very much here and we move down, it might be that we must you know, take out a few stops and come back into this range. But if we stay within a very defined range for say like 4, 5, 6 weeks, 2 months, and then we break down, okay, because we've had a lot of time and a lot of price acceptance at that level, if we move lower, we'll probably drop by like another 20, 30, 40%, definitely quite possible. And that might be the catalyst that gets us to 14k or so. But also if we stay within this range and then we move back to the upside, okay, it gives us a higher probability that we can take a bigger trade and make a bigger move of about say 30% if Bitcoin was to break out from $22,000 and do something like that, and then we move back to the upside. That's the sort of scenario that I'd be looking out for. And obviously let's bear in mind the DXY, which I want you to think about as like a current when you are swimming in the ocean. in that when the DXY and the dollar is strong, it doesn't mean that Bitcoin can't push up and move up in price. It just means that it's like a current and a wave that is pushing against you, and it just makes things a lot more difficult. Okay, when the dollar is down, okay, and is in a downtrend, it gives Bitcoin a little bit more breathing room, and like I said, it's like the tide is flowing with you, and makes it a lot easier for you to reach your destination. So think of the DXY like that, and currently the DXY is strong, okay, and could potentially pushing up to more new all-time highs, or multi-year highs, should I say. And potentially moving up to $111 level. But, you know, so long as the Dixie is strong, I think that there is going to be more pressure on Bitcoin. So a little bit of relief here in the Dixie to maybe like coil over, at least correct sideways, would it give Bitcoin and the altcoins at least some breathing room. And goes without saying that you should, in my opinion, either be in cash and be conservatively buying with a proper structured plan. You know where I've bought at that $19,000, $20,000 and $22,000 level, okay, and be very altcoin light. This is not the time to go into altcoins. I definitely think there is the potential for Ethereum and a lot of the other altcoins to actually drop even further, and Bitcoin can still just go sideways or not even move that much. That's basically what happens in a bear market. A lot of the smaller projects will eventually get shaken out, and you know, likely it is going to rhyme and repeat as it has done in all the bear markets, where Bitcoin will survive, a lot of the majors will survive, but you know, most altcoins are still going to get slammed 30, 40, 50, 60%, even further from current levels, and ultimately either die out or, you know, lose about 95% of their value. So something to bear in mind as well. So if you liked the video and you got value from it and you got a little bit of perspective with what my views are, do consider liking the video down below, subscribing and hitting the bell icon as well if you haven't already. And I'll be coming out with some more updates for Bitcoin and some of the other major cryptocurrencies this week and next. So I'll catch you lot in the next one.